In this episode, I will break down the time and price theory of the London session. There are certain moves that repeat every single day during the London session, but they happen only at specific times within the session. I am going to break down these exact times when you are most likely to see the highest probability moves each day. Let's get straight into it. This ICT strategy that works in the London kill zone is one of the most precise strategies you can use. And the reason for that is because every concept within it aligns perfectly with how the market actually delivers price during that session. And there's a reason why this is specifically a London session strategy, because as you guys know, the London session is where the Judas swing typically occurs. And the Judas swing is essentially a liquidity grab or a liquidity sweep. So London's role in the market is to take liquidity before the real move happens. So in this video, what I'm going to do is break this entire strategy down step by step in a mechanical way so you can actually follow it without overcomplicating things. Now, before we get into the execution, the first thing we need to understand is what pairs we should be trading with this strategy personally. I like to keep it very simple and stick to Euro, USD, GBP/USD, and Gold EUR, USD, and GBP/USD are the cleanest when it comes to structure and delivery, especially if you're still building consistency. And gold is great if you are more comfortable with volatility because it tends to move a lot more aggressively. Now, the next thing we need to understand is what time frames we are going to be using for this model. We are mainly going to be working with the 15-minute and the 5-minute time frames because the 15-minute gives us the overall context and liquidity, and the 5-minute helps us refine the setup and execution. Now, before taking any trade, we need to have a clear checklist. And this is very important because this is what keeps the strategy mechanical and repeatable first. We need a clear liquidity pool, something like equal highs or equal lows, where stops are resting. Second, we need to see that liquidity get taken, because without a liquidity sweep, there is no reason for the market to reverse. Third, we need a market structure shift along with displacement. And that displacement should be strong enough to show that the market has actually changed direction. And finally, we need a point of interest, something like an order block or a fair value gap where we can actually enter the trade. Now, the last and most important piece is timing, because this strategy only works properly within the London kill zone. The time window we are focusing on is from 2 a.m. to 5 a.m. New York time, and whenever ICT refers to time, he is always referring to New York time, so it's important that your charts are aligned with that. So if you need to, you can go into your trading view settings and change your time zone to New York, so everything matches up correctly. So once you have your pairs selected, your time frame set, your checklist in mind, and your timing aligned with the London kill zone, now you're ready to actually understand what this strategy looks like in real market conditions and how to execute it step by step. So first things first, you need to mark out your London session, and you can either do this manually or use an indicator. But the key is to clearly define that 2 a.m. to 5 a.m. New York time window, because that's where this entire model plays out now. Before the session starts, you don't have any bias, and this is very important. You're not trying to predict the market. You're just letting price do whatever it wants, whether it moves up, down, or just ranges once the session begins. The first thing you want to do is mark out liquidity, and the easiest way to do that is by identifying significant highs and lows on the 15-minute time frame. So you'll have buy-side liquidity resting above highs and sell-side liquidity resting below lows. And just to keep it simple, above buy-side liquidity you have buy stops, and below sell-side liquidity you have sell stops. And the basic rule you need to remember is, if buy-side gets taken, you look for sells, and if sell-side gets taken, you look for buys. Now, after marking your liquidity, you're not jumping into trades, you're just waiting, sitting on your hands, until price actually sweeps one side of that liquidity. Once that liquidity sweep happens, that's your cue to drop down to the 5-minute time frame. Now, on the 5-minute, you're looking for a market structure shift. But not just any shift, you need displacement with it. And this is where a lot of people go wrong because they see small, weak candles and think that's enough. But what you really want is strong, aggressive, full-body candles that clearly show momentum. That's what confirms that the market has actually shifted direction once you get that displacement and structure shift. Now you draw your OTE from the high to the low in a bearish scenario or low to high in a bullish one, And your OTE zone is going to be that 0.618 to 0.786 area. That's where you're looking for price to retrace into. Now, inside that OTE zone, you want an entry model, either an order block or a fair value gap. Both work. It just depends on what you're more comfortable with. And it's important that you're anchoring your fib correctly, making sure you're using proper swing highs and swing lows, not just random candles once everything is marked out. All you're doing now is waiting for price to retrace back into that OTE zone and tap into your point of interest. That's where you execute your trade, place your stop loss beyond the swing, and target the opposing liquidity. And that's really the beauty of this model. It sounds simple, but it's built on strong logic, liquidity, displacement, structure, and precise entries. So now that you understand the full step-by-step process, let's move into a live example and see how this actually plays out in real market conditions. Now, jumping straight into it, I want to show you guys the indicator that I personally use because it just makes everything much cleaner and easier when you're trading this model. So instead of manually marking out the London kill zone every single day, this indicator automatically plots it for you from 2 a.m. to 5 a.m. New York time. And it also marks out the New York kill zone from 7 a.m. to 10 a.m., again, all based on New York time. The name of the indicator is KZ Boxes by David, and honestly, it's very useful because it saves time and keeps your charts organized without you having to draw anything manually. You can also customize the settings, colors, and sessions however you like. So if you want to match exactly what I'm using, you can just copy those settings, and you're good to go. But at the end of the day, the indicator is just a tool. It's not what makes the strategy work. It just helps you visually stay aligned with the correct session. So whether you use it or mark it manually, the important thing is that you always know exactly when the London kill zone starts and ends because timing is everything with this model. Moving into the example, the first thing I want you to do is go onto your charts, switch to the 15-minute time frame, and locate 2 a.m. New York time, because that's where your London kill zone begins. Now, before that time, what you want to do is mark out the significant highs and lows on the 15-minute chart, because those are your liquidity levels. And that's what price is going to target first once you have that marked out. Now you shift your focus to a lower time frame. You can use the 5-minute, 3-minute, or even the 1-minute. But in this example, we're using the 1 minute for more precise entries now. On the 1-minute chart, you can clearly see that we get a market structure shift, and this shift comes with displacement. And not only that, we also have an order block and a fair value gap forming together, which gives us a very strong point of interest. So now what we do is mark out our OTE leg and check if everything aligns. And as you can see, our PD arrays are sitting perfectly within that OTE zone. So with everything lining up, liquidity taken, structure shifted, displacement confirmed, and confluence inside the OTE, now we can execute the entry as taken at the consequent encroachment of the order block, which gives us a very precise entry point for risk management. We place our stop loss below the low that caused the move. And for our target, we aim for the opposing side liquidity. And as you can see, price moves cleanly in our favor and delivers straight into our target. So this is exactly how you apply this strategy, step by step. It's simple, structured, and when executed properly, it becomes very powerful. And like Ike himself has mentioned, if you stay consistent with a model like this, you can build profitability and even pass your evaluations just by mastering this approach. So that is the complete London kill zone model, broken down step by step. As you've seen, this is not about guessing or predicting the market. It's about waiting for liquidity to be taken, confirming the shift in structure, and executing at precise levels like OTE with strong confluence. The beauty of this strategy is in its simplicity. If you follow the checklist and stay disciplined, the setups become very clear and repeatable. Don't rush trades, don't force entries, just wait for everything to align and let the market come to your levels. If you stay consistent with this and actually practice it on the charts, you'll start to see how powerful this model really is. If you found this helpful, make sure to like and subscribe, and I'll see you in the next one.